Hello and welcome back to the channel. In this video, we are learning about a very important concept in technical analysis known as trading indicators. So if you have ever looked at a trading chart like this and have felt overwhelmed by all the line and all the elements that are present here, you, my friend, are in the right place. We'll break down what indicators are, why they are useful, and how to use a few key ones to improve your trading and understand how the trading works in terms of technical analysis. So let's build a solid foundation for your understanding using technical indicators. So without any further ado, let's get started. But before that, if you haven't subscribed to our channel yet, make sure to like, share and subscribe so that you do not miss out on any new updates coming from us. So first off, what exactly are these trading indicators? If I simply put, they are basically tools that the traders use to analyze price action, right? How the price is moving, so the trend that they are following and so on, so that they can make some informed decisions out of it, when to enter the market and when to exit the market. So their calculations based on a stock's price and volume. So this is the stock price that you can see in terms of candlesticks, and below we have the trading volume that the stock is doing in that particular time frame, and the candlestick represents the change in price of that particular time frame. For example, it is daily time frame, so one candlestick is for one particular day. Right now I am at 4th March, then if I move one step ahead, it is 5th March, right? So this is a daily time frame, so a daily chart is being shown over here with the daily volume chart. Now in terms of adding on to it, what are the changes you can do, right? You can change the candlesticks into other elements over here, a line, a column, maybe area, graph and all, but the most important one and the most followed one are the candlesticks, right? And the second element that you are presented with in a chart, right, of a trading platform are the terms that we are going to discuss, that is indicators, right? So this is the tab. When you click on it, you get a list of hundreds of different indicators, which are basically mathematical algorithms, or you call it calculations, that are automatically present as a preset in your trading chart. So what is the importance of these indicators, if you ask me? So these indicators help to identify trends. So is the price generally going up, down or sideways? It is used as a gauge to identify a momentum. How strong is the trend? It also helps us to spot overbought or oversold conditions. Is the price too high or too low relative to the recent trading? And also one important point, it gives us an idea of buy and sell signals. So potential points to basically enter or exit a trade, right? So there are two types of indicators here. So there's a very long list, but I will give you an example of two types of indicators. One are known as lagging indicators and the other one are known as leading indicators, right? So I'll start with the leading one first. So what is a leading indicator, right? So I will just write here RSI, which is known as a relative strength index. So this is a leading indicator. First I will add this into the chart. So you get an indicator as a separate chart over here. Some of the indicators are embedded in the main candlestick charts itself. The other ones are shown as a different chart at the bottom of your screen. So what is relative strength index? So I mentioned that it is a leading indicator. So leading indicators are basically the indicators that attempt to predict the future price movements. They can give signals before a trend change occurs, right? They try to give. They are not 100% accurate in doing so, but they try to give, right? So they are leading indicators. So RSI is one of them, relative strength index, which is a leading indicator and is also known as a momentum oscillator. So basically it measures the speed and change of price movements, okay, the speed in which the price movements are occurring. So it helps identify what are the overbought and the underbought zones. So an RSI above 70, right? If you can see the RSI, if it goes above 70 anywhere, right, then the market is considered to be in overbought zone, suggesting that the price may be due for a pullback. So whenever you have seen the market has gone above 70, there is a pullback that has come up, right? See, as you can see here, the pullback has come, the trend and the market has gone down here, right? Similarly, this has occurred in a lot of other variations as well, right? For example, here, some of the examples, see here, right? the market has systematically given a pullback. So above 70, it's generally considered that the stock is in the overbought zone and a pullback is expected. Similarly, an RSI below 30 is considered to be oversold, suggesting that the price is due for a bounce, right? We can see, let's see some of the areas where we have expected the bounce. Below 30, let's see when it has gone below 30, right? Here you can see, right? This is an indicator, this is an indicator, but here it is the classification over here at this point where you can see when it has gone below 30, it is bound for a rebound, right? It has tested this boundary and it has rebounded, right? It is slightly more clear in the hourly chart or maybe a 4-hour chart if you look at, but in terms of going below RSI 30 is considered that the stock is in the oversold zone and it needs a rebound, right? So that is what is expected from the RSI indicator, right? So it basically gives you overbought and oversold zones. So now that we have seen the leading indicator, now let's look at what a lagging indicators are, right? So I will now switch to another chart. Let's take an example of, let's say, HAL, Hindustan Aeronautic Limited. So now let's look at what a lagging indicator can be. Now here in this, I would add an indicator known as moving average, right? So here is a line that has come up, right? I've told you that some of the indicators, the indicator would be embedded with the candlestick itself, right? I will change this setting to, let's say, 50 day. So basically it is a moving average. So you can select the number of days it takes the average off. So I've taken 50-day moving average over here, right? Now, why do I say that this is a lagging indicator? So basically it follows the price action and confirms the trends that have already started, right? See, I will give you an example. Now in this particular area, this has given a downturn over here, right? It has given a downward trend over here. Like clearly we can see a downward trend, right? But if you closely look at, if you see over here that this particular line has not immediately reacted going downwards. It is taking its own sweet time, right? According to the candlesticks and the price has downgraded from 4700 to 3700, almost close to 1000 rupees down. But the moving average is not showing a downtrend right away. It is showing consolidation, which means the price is a bit stagnant or not really moving, which means that it is not giving me immediate reaction to what is happening in the market. So basically this comes under the category of lagging indicator. It gives me a downturn, but it gives me slowly, steadily taking its own sweet time, right? So this is a lagging indicator. So you would ask me, so can we not use moving averages? Is it not good? No, not at all like that. It depends on whether you are investing in long term or short term, right? If you're looking at a longer term perspective, then moving average is really nice to understand what the trend of the market is, right? So how does it tell you that? So it also forms support and resistance zones. I will show you how. Can you see this yellow moving average line over here? And you can see that the candles stick pattern, right? So they have bounced back from here. So this is a support. So the moving average lines actually give you support, right? See here also, it has bounced back from here. It's a support line, right? So once it breaks the support line, it becomes a resistance line, right? So this is a resistance. It's not going above it. It's a resistance line. It is a resistance line. So it also gives you the indication of support and resistance zones. That's why moving average is a very good indicator of your price action for any stock if you're looking for a longer term perspective as well, right? So this is about moving average as a lagging indicator. So the indicators are also used in conjunction with other indicators. For example, that moving average is often used by another moving average known as moving average exponential. So which is basically the same type of moving average, but this is an exponential moving average which gives more weight to the current prices in calculating the average. So it is more susceptible to giving good short-term indications, which means that the movement would be quite frequent in this one. Let's have a look if that's true. So if you can see over here that moving average gives a lagging indicator, but when it is EMA and when it is a 9-day EMA, which is a very short duration, it gives you sudden signals over here, right? So the crossovers in moving averages are also an indication of whether it is in the buy zone or in the sell zone. If an EMA crosses an MA line, it's a downtrend. The EMA line crosses over the MA line, it means it's an indication of a uptrend, right? So these are some classifications. Again, it can vary from circumstance to circumstance. If there is any news coming up, or if there is any other situation that has come up in the global markets, this is not really relevant then, right? So you need to use indicators as and when the market demands. You need to have research about that own stock, the fundamental analysis, all the technical analysis, the charting patterns. So you have to have a lot of knowledge to give the right indications of what is going to happen in the market. Again, nobody in the world can predict where the market goes. It is all price action, fundamental analysis, and the research that you do, right? I hope you found this video helpful. If you did, please give it a thumbs up and subscribe to the channel for more such videos. Let me know in the comments which indicator you like to use, and if you have any questions, feel free to put them in the comments below and I'll be more than happy to answer to them. Happy trading, and I'll see you in the next one.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.